So why don't you walk us through kind of like a typical morning and like what you do with your students and what is your kind of approach to finding the opportunity and then executing on that?
Okay, so like back when I first started, I used to do like 3 hours at night of chart work.
Yeah.
And that was just because, I'm trying to find resistance, support, all those things were like a big thing. Like it takes some time for me. And then nowadays I'll wake up in the morning an hour before the market, an hour and a half before the market, put together my top 5. And as we get closer to the open, about 30 minutes, I'll narrow it down to the top 2 plays. The things that I'm looking at in the morning are what's, showing divergence against the market. For example, the S&P 500 and QQQ, right? NASDAQ and then the S&P 500. What's stronger or the strongest compared to the market and what's the weakest against the market? And then I look at those and then I find those and then
As in
after
you're
that,
looking for like, if the S&P is strong, you're looking for a weak stock within
exactly.
the S&P?
So like, let's say the S&P is up or the NASDAQ's up 1% for the day, pre-market.
Yeah.
I'm looking at stocks that are up 2, 3, 4%, showing me strength. And then I'll look at stocks that are down below like 1%, 2%. Because now I'm looking at the stocks that are extremely strong against the market and extremely weak.
Yeah.
So what I like is when I see something that's weak and the market is strong, for example. Because if the market ends up getting weak, that's going to be the first stock that gets affected because the overall market gets affected when NASDAQ and the S&P 500 comes down. So for example, Meta today, I took that trade as well. Meta was falling as the market was increasing and there was a key level at 550, right? At that 450 or 550, one of those. And that was my key level. So as the market was pushing, this was still like either dropping or consolidating. So I had my eyes on it. When the market had its first red candle this morning, Meta was the first stock to get affected.
Yeah.
So I ended up taking Meta to the downside for a quick $2 scalp. It was about 9%.
Yeah.
And I took advantage of that type of move. Obviously, I could have got more, but the divergence plays are the easiest plays to deal with because you have something to compare to. It's not just the stock, key levels, supply zone, demand zone, resistance, support levels.
So it's got outside influence that's going to affect what you're looking at.
And that's what I like because I can at least have something to depend on or look at to compare to the stock that I'm trading.
Yeah, as opposed to just looking at it stock or option as an individual. You can see, okay, this is a setup that looks good, but there's also going to be an external influence to push it in the direction that I'm hoping for. Yeah.
And that's why I like divergence plays because I can at least get a feel of where the market's at and where my stock is at.
Yeah, so you're basically building a daily bias and then picking an individual stock.
Correct. And then I have to find the key levels after that. But the first thing is finding what's weaker and what's stronger.
Yeah. And what are you looking at as far as like chart patterns? What's your kind of go-to?
I'm not into the crazy chart patterns. I keep it fairly simple. If it's a trend line, if there's some trend lines that, a downtrend or uptrend, I still needed to have a key level near that trend line for me to even play that stock. If it's just a downtrend and it breaks, I'm not playing those because there's too many like false breakouts and it's like a waste of a trade. Because a lot of people are playing with cash accounts. I have the option to, get in and get out if it doesn't work out. Some people have like 1 or 2 trades that they can catch for the day. Yeah. So I have to be very patient with that. And that's like what switched my like trading style is the people I have watching me every single day.
Yeah, yeah.
But that's like the main part. But for the most part, I'm using key levels and psychological levels. For example, like Tesla's psychological levels are every like $2.50, where there's like a wall that pops up on level 2, but the key levels are usually every like $10.
Yeah.
And I'm using
key level as in like a supply and demand zone, support resistance.
Supply and demand zones. So I'll use those to my advantage. But the first thing that comes first is divergence, find the divergence, then find the key levels, and then trend lines I'll only play if there's key levels.
Yeah.
I don't use any studies on my screen. I might have an EMA on my screen, but I'm not using it to take positions. I might use it to hold my positions longer.
Yeah.
But I don't have like VWAP and MACD and RSI. I don't have any of those on my chart.
It's indicators can be helpful as like finding confluence, but they don't do anything as far as making the decision for you because they're all lagging. So it's a lot of people get too caught up. What indicator should I use? Like I have indicators that are included in mine.
Yeah.
Like they're helpful, but they're not necessarily needed.
Yeah. And like when I first started, if you go back to like my first YouTube videos for like the first year, I was looking at RSI and I was looking at MACD and I was looking at all these different things to, kind of push me into the direction of taking a position. Yeah. Which later I found out it's like I got lucky with a lot of those plays, but they really don't mean too much when you're in that trade. Just because RSI is telling you this is overbought doesn't mean it's not going to move another $5, $10 to the upside. So I just use tape.
I have custom indicators that I made that are kind of versions of RSI and MACD. The problem with anybody who is trying to use indicators that are free is that there's no edge because there's hundreds of thousands or even millions of people looking at this same indicator in order to have any sort of edge in the market, you need to be looking at something a little bit differently than the masses. And the masses are all using RSI, MACD, so there's no edge. So there's not going to be any real benefit unless you're looking at it in a different way than what most people are doing. Like you can use RSI a little bit differently by looking at divergences in RSI, as opposed to just looking at strength and weakness of overbought and oversold.
Yeah.
Where a lot of people might only do that. You can also use it to look at a divergence. Like the one that I created was kind of like a
I think I've seen
RSI. Yeah, it's called degenerate. But that is, it'll give you a lot more divergent signals than a normal RSI would. Same with the MACD version of it. So it's just a little bit different.
When I say indicators, like the new traders, they have like 40 different things on that chart. I don't even know how you see the candles sometimes. It's crazy.
Yeah.
I don't understand.
At the end of the day, the best analysis is just price.
Correct. Yeah. And time to sales level too.
Yeah.